Welcome back. Now it's time for our weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing U.S. markets mostly higher today, and this does follow a rally yesterday on the back of the U.S. Federal Reserve raising rates by 25 basis points as expected. The market's takeaway from the meeting was dovish, hence the market rallied. But Fed Chair Jerome Powell is still maintaining somewhat of a hawkish stance by saying he really wants to make sure he's got evidence that inflation is on a sustained downward path. So market's interpretation is dovish and a rally, and that's what we're seeing continue today. But be aware that the U.S. Federal Reserve, again, wants to maintain their stance that inflation has got to continue to decline. Importantly as well, just to put this in perspective, they raised rates by 25 basis points. In December, it was 50, and prior to that, they did 4 raises of 75 basis points. So certainly they are pulling back on that rate hike tightening aspect, which has, of course, tightened up financial markets and also, of course, caused a lot of volatility. Away from that, though, again, we'll continue to hear how they interpret the data points as it relates to the economy and the outlook. So hearing a lot from various central bankers, the Fed yesterday, and of course today we had the ECB as well as the BOE, so ECB, European Central Bank, and the Bank of England, both raising rates by 50 basis points. So again, still a lot of focus on what the central banks are doing and to what degree and how that therefore impacts the markets. Away from that, in terms of what we are seeing working in the markets today in the United States, it is big tech, really led by Facebook or Meta, the new name. They did report their numbers after the closing bells yesterday. They beat revenue by 2%, so not a lot there. But importantly, they did cut their expense guidance as well as their CapEx. To the tune of about in the billions of dollars, and that is causing the stock to rally today up by about 20%. They said that 2023 is the year of efficiency. So investors obviously pleased with that kind of mindset in terms of cutting the expenses and the CapEx. Away from that, just on the economic data front, I would point out that the initial jobless claims in the United States came in lower than expected, so that's a good thing. And actually the lowest initial jobless claims in 9 months. On the economic front as well, though, the factory orders reported did come in below consensus. So again, there's still a bit of a question mark in terms of the strength of the U.S. economy, and of course that dovetails into the Canadian economy as well. In terms of just stepping back, we are in the midst of U.S. earnings season, Canadian earnings season, I'll get to in a second. That's also picking up. But we've only seen about 70% of the U.S. companies beat the consensus numbers. So somewhat underwhelming. But the stock reaction has been quite good, and that's because the bar has been set so low. So you are seeing these reports come out, and stocks finding some strength or some rallying. Also, of course, when you listen to the company management calls, the companies are saying that the input costs are declining, supply chain constraints are improving, and they're also, of course, continuing to focus on profitability. So taken all together, you're actually seeing pretty good reactions in the market on the back of the earnings results, despite them being somewhat underwhelming. Today is a big day for U.S. earnings. Eli Lilly, Merck, as well as Hershey's all reporting this morning. But after the close, keep your eyes out for Amazon, Apple, Google, and Starbucks. So big earnings day in the United States. Shifting over to Canada, the TSX is trading a little bit lower, or a little bit unchanged today. It was lower yesterday. We are seeing WTI pull back a little bit. OPEC Plus is going to be, those OPEC Plus producers are going to be keeping their output unchanged, their output levels unchanged. So we'll wait and see what happens next there and the impact that will have on the price of WTI. But bottom line, when people look at WTI, the view is that we have increasing demand, specifically with respect to China reopening, and we have not increased supply for a decade. It is somewhat quiet here in the Canadian headline aspect, but we are seeing earnings pick up. BCE did have a slight earnings miss. They did, however, raise their dividend by 5.2%. Canada Goose came in less than expected on the earnings front, perhaps quite disappointing there. And Rogers had a better than expected fourth quarter earnings results, $1.09 versus 99 cents expected from the consensus numbers. Profit jumping 25%, fueled by their wireless business. So some good results there. Nima, a lot to watch. Again, it's front and center as it relates to earnings. We'll keep you posted. Back to you.